Warning: the views and opinions expressed in this program are our own and/or those of our guests. They do not necessarily reflect the views or positions of our employers. Viewers' discretion is advised.
If you're a BDO that's your volume is bad, you're worried about losing your job, still don't do fraud.
I think this investigation is going to exploit those guys as well. They're going to expose them.
What's the final step? Are we going to see brokers that have higher defaults get banned from the program because the government's losing money?
But these guys that I'm talking about, they're posing themselves as the agents.
Oh, so they're also trying to get a referral
making
fee?
a 1-point referral fee on the deal.
Oh, wow. So blatant. I'm leaving this podcast more scared than ever.
I'm getting hair plugs. I'm going to Turkey and I'm getting hair plugs.
Are you really? You're going to go to Turkey?
Me and Ross McClellan are going to go. We're going to play golf and get hair plugs and come back.
I think I might come with you.
Dude, it's going. It's crazy.
You guys got to get those hairlines up right here, right in the middle of the forehead.
Right here. I'm coming right here. It's going to widow peak too. This is what I want. Just like that.
My friend went to New York City to do the hair plugs, and
all
his
New
hair.
York City.
Huh? Yeah, it was
New York
expensive.
City.
But he didn't want to go to Turkey. He was like nervous, but
Turkey's the place to go. They got all that illegal stuff over there.
It's like $6,000 too. You know what I mean? It's like
but they use stem cells. They use stem cells. They put the hair in, and then they use stem cells to promote the growth. That's why so many people go out there.
Hey everyone, welcome back to the BDO Show, a podcast for passionate BDOs wanting to level up their game with advice and stories from battle-tested BDOs. I'm your host, Emily Detor, and I'm here with my fellow co-hosts, Alan Peterson, Ryan Kroge, and Ray Drew. At the beginning of each episode, we're always going to remind you to like, subscribe, and send your topics and suggestions over to the BDO Show at artofsba.com. And check out our other family of shows, SBA Today and the Art of SBA Lending podcast. BDOs. Have you ever had a borrower bring in like a brother-in-law to do their life insurance? Doesn't end well, does it? We've all been there. When you require life insurance on your SBA loan, it's critical that you bring in a company that specializes in getting these policies in place for the SBA loans. The last thing you want is for life insurance to be the holdup. We all know that's a rookie mistake. SBA Protection Quick Close Life Insurance is the fastest, easiest way to secure the insurance protection that your borrower needs for their SBA loan. Their process is simple, hassle-free, and only takes a few minutes of your borrower's time. No lengthy paperwork, no complicated forms. They even have programs that don't require labs or doctor records for approval. And best of all, you will have the collateral assignment back in less than 24 hours. It's a no-brainer. Go to SBAprotection.com for more information or email Adam Bergen at adam@sbaprotection.com. Today's episode, the SBA is after our agents. And I don't really know what the boys think about this or the bill that just came out and all that, or the act or whatever the heck it's called, but Ray has it printed. I'm shocked Kroge does not. Alan is here to give us the back side of the details because I'm pretty sure he's going to tear it apart a little bit.
Al is here as our official source of SOP knowledge.
Yes, he is. He's our control F.
Not only that, I was a broker for a while as well, so I kind of have a
Yep.
You know, this one kind of is interesting to me. This development as every time I feel like every 2 days there's something new lately. You know what I mean? It's like let's just chill, all right? 10 down, we get it. All right, fine. Like
10 down.
Can we live? Can we live?
Ever since
I think it's
Cancun,
great.
things have just been crazy.
I think it's fantastic. I like that they're finally starting to dig into the mess that's been going on in this industry for a while. It's been running out of control. It's been kind of not a lot of oversight on what's been happening, and a ton of fraud. Everything from PPP to EIDL, cooked books, to structured deals, to straw buyers. I mean, you name it, over the last 5 to 10 years, it's been happening at an accelerated rate. I see a deal like that structured come across my desk at least once a week. I kick it away. I punt it. It's just, it's becoming...
It's got to be a Detroit thing, though.
No, these are actually ones coming from outside of Michigan, to be honest with you. The ones I see in Detroit are pretty cookie cutter type of stuff that I see all the time, but I think that's just because people around here know what to say.
No bad loans in Detroit. You're not just a homer either.
No,
here's my question.
That's right. No bad loans in Detroit. Those are all happening south of here.
Well, South Detroit is Canada. A lot of
This is
people don't
true.
know that. The famous Don't Stop Believin', when he born and raised in South Detroit. There's no such thing as South Detroit. It is
That
the
is
only
right. That is
place in the
Windsor.
United States where you travel south to get to Canada.
That's right. Now, you
Wow.
would be in Windsor, Ontario, if you went south of Detroit or to
I forget who
South.
taught me
Random knowledge
that
of the day. I
fact.
love that.
I forget who taught me that Detroit fact, but it's a good friend of mine.
Let's go ahead. Like, I don't know who wants to break this down. Maybe Ray, because I think he read it 15 times.
Yeah, I think
But
it's a good idea.
this act is cited as the 7A Loan Agent Oversight Act. And so, Ray, why don't you give us like kind of like a quick excerpt of what's happening here?
So this is past the House, and it will probably get signed into law as part of the big beautiful bill. And it's just basically Congress telling the SBA that they need to provide them with information specifically on agents in the 7A program. And so this act, basically this part of the bill, just outlines exactly what data they want from the SBA, and it has to do with how many, what are the interest rates of the loans that are charged by agents versus non-agents? What are the defaults of the 7A loans that are tied to agents? What are the fraud that is tied to agents, and also default rates or repurchases. So basically, this is to me the first step of them just trying to kind of figure out if they can figure out any correlation between agents or brokers or referral people and excess fraud, excess defaults, or charging higher interest rates. Because obviously one of their big initiatives right now is rooting out fraud in the 7A program.
Here's a question I got for you, Ray. You might know this as your hands on the pulse here. I saw a figure online that said 300. It was $335 million in fraudulent loans, and I was just genuinely curious if you guys know, is that all 7A, or are they incorporating PPP fraud, EADL, and similar when they're getting that figure? And do we know at this point, like, of that 335 million, if I have the figure right, and if we assume it's just 7A loans, do we know how much of that is broker driven? You know what I'm saying? Like, how, like, that's a lot of bad loans. I get it, right? But is there a direct correlation that
You said
today that caused
335
this?
million?
That's what I read.
300? No, that's got to be PPP and EIDL loans then.
Kind of sounds
Yeah.
like a low figure too, to be honest with you.
Yeah.
Mhm. Yeah, I was just wondering because, the thing about it is fraud is never like, if you're committing fraud, then you suck. I fired a broker because he junk feed, on 2 different deals, and it put my borrowers in really, really bad spots, and all that stuff is disgusting. But to defend the good referral partners out there, and there are plenty that we all, get to work with, they're not pulling tax transcripts. You know what I mean? Like how much responsibility should we really be placing on them? Like, when the bank is really ultimately should be catching, hey, 3 years of tax returns filed 2 days apart from each other, and then a loan
Mm.
application a week later. You know what I mean? Like, do we need, our good brokers to start pulling 8821s? Does tax guard stock go up because every broker is going to have to start using it? I mean, what do you guys think about that?
Well, I think it just really depends on the type of fraud that they're seeing and the type of defaults that they're seeing. I'm seeing things all across the board. I haven't come across anybody who's filed fake tax returns or fraudulent tax returns.
I did last week, dude.
You
That's
did.
why I brought that. Yeah.
Okay.
Yeah.
That's wild. I did. The only time I ever saw that, I think I've told this story before. This is years ago. This is like 2005, 2006. I had someone come in and apply for a small loan to acquire a liquor store. And I looked at the financials and the taxes. I'm like, there's no way this is going to appraise. This doesn't make any sense. And then she left and she came back the next day with a completely different set of tax returns. She goes, does it look good now? It's just, I mean, deadpan straight. I'm like, oh yeah, this looks great. But
Yeah.
you brought me a completely different set of tax returns yesterday. You can't do this. That's not legal. This is, you're frauding a bank. This is not a good sign. So we had to take care of that accordingly. But what I'm seeing are more straw buyers. I'm seeing straw buyers and I'm seeing structuring. And let me get to the structuring part first. There is a group out there. I'm not going to name any names, Ray. Okay, I'm not going to use any
Call them out.
proper
That's what
nouns.
Chris Hackney would say.
Okram already has their names. So, and he's a really popular guy on LinkedIn. He posts a lot of stuff on LinkedIn and he posts a lot of stuff on Twitter. So
Ryan Collins? No,
no, he's a loan broker. He's a loan broker, and he brags about owning 8 deals that bring like $800,000 or something like that to him. Does nothing. But anyway, this is what he and his group like to do. They like to get together and they like to find a business, and then they write a LOI. And then with that LOI, they assign that LOI to a straw buyer. So they find a buyer who has a little bit of experience, some transferable experience, something that would make it look right to a banker, right? And they're going to own 85%. And then the other 15% are going to be a whole bunch of investors, right? 8, 9, 10 individuals that are going to be putting in all the money. But the straw buyer is the guy that's going to be operating the business, even though really it's going to be more of these 10, 15 individuals that have the investment. Now, what they do is they assign that LOI to the straw buyer. Let's say they have the LOI signed for $2 million. They assign it to the straw buyer for $2.5 million. Now, from a $2 million deal to a $2.5 million deal, they send it into the bank saying, we are buying this, let's call it a electrical contractor, for $2.5 million. So the bank goes and they finance it for $2.5 million. They fund it for $2 million. The investors get $500,000 that they put back in to reimburse for their down payment of $250,000 plus some. Now they bought a business 100% financed with no money down. They made money out of it. They didn't even have to guarantee. They got a straw buyer over there taking all the risk. And then these 8 to 10 individuals are the ones laughing all the way to the bank because they have a side agreement where they have control and they're getting most of the dividends and distributions going down the road. That's is a crazy. Real case. I kicked it out.
Well, then that's
twice.
That's since I wish you were here for the other day, because that seems like the exact reason why they introduced that search fundy side agreement type of language.
Yeah. That's legit. Exactly. It is legit. Yeah. And I might get a lot of hate for this, but it's a bunch of these older Gen Zs, young millennials that are getting together. They're climbing out of their mom's basement with their online Wharton School of Finance degrees. They're getting together. They're smart. They understand technology. They understand the SBA, and they understand how to structure a deal. And they're putting these all together, and they're buying 6, 7, 8 businesses with no money down. They're making money off of it. They're putting straw buyers on there. They have side agreements where they get all the distributions and they make all the money, and they ride off into the sunset, because then they have another agreement with the prior owner that not only do they get more money for selling, but that they get to stay on and run the business for them.
That seems like a problem. Now,
that's a big problem.
That wouldn't be an agent, but that would be more relevant to that other.
But these guys that I'm talking about, they're posing themselves as the agents.
Oh, so they're also
making a 1-point referral fee on the deal,
because
they're coming in
so blatant.
Let's call it we'll call it Castle Capital is the name of their company. All right. Now I'm using a lot of words that are very close to who these guys really are. Let's call it Castle Capital that they're coming in and they're saying, yeah, we're going to refer you this guy by the name of John Jagel Jamerheimer Schmidt, and he's going to buy this plumbing company down in South Carolina for $2.5 million. Here's the LOI. Little do I know that LOI is on top of another LOI that was assigned to John Jacob, who's doing it. They're making $500,000. They're injecting $250,000. They're making a 1-point referral fee. They've got a straw buyer. Seller walks off into the sunset with $2 million plus a little extra cash, still gets to run his business and make a big salary.
Man, Matt, what if they use those powers for good? You know what I mean? Like, that's like a lot.
I mean, that's a scheme.
It's a scheme, all right.
It is a scheme.
So
it's fraud, and I think they're playing in a very dangerous gray area out there where they don't think it's fraud, where they think everything is above board, but it's not. And I told these guys no on a couple different occasions, and they're out there. Some bank is doing it. Yeah, some bank is doing it.
Yeah.
Yeah, that's crazy. I mean, yeah, well, it sounds like Okram's on it, so that's good. Now, what do you think about this new effort that's underway? Because to me, it seems like they're trying to crack down first and foremost on fraud, and I guess look at the data and kind of see if they can see any trends having to do with tying agents to fraud. Two would be just defaults in general, seeing, maybe if there's any correlation between agents and a higher chance of default. And maybe, if you look in that direction of high defaults, maybe you then see maybe there is some fraud there that they uncover. So defaults is, I think, something they're going to look at, obviously. And then the last one is interest rates. And this one's kind of interesting because
for years, SBA lenders have relied on referral sources because, let's be honest, reaching businesses directly is just not how the industry worked. It was too hard to find the right contact info, and when you did, actually getting them to engage felt impossible. When Ray first heard about this, he was skeptical because he gets pitched every single day. But 15 minutes into this demo, he realized something. This could actually work. Resquared lets you reach local business owners at scale in a way that actually works. Ray's been using it for a few months now, and not only is it effective, but it's kind of fun. In just a few minutes a week, he's sending targeted messages to small business owners and getting real conversations started. Like the childcare owner he connected with that was looking to buy their second location with an SBA loan. If you ever considered connecting with small business owners and didn't have the right tool to do it, this is it. Resquared is offering a discount just for BDO Show listeners. So go ahead and schedule your demo today, and we'll leave a link in the show notes for you below.
They're going to say, is there a...
I mean, I'm the one issuing the term sheet. You know what I'm saying? Like that if they're selling P3 because they're, making, because they're paying 3 points, rest in peace, our former co-hosts. But it's like, if we're like, if banks are buying the market and then they have to hold rate to incentivize the brokers to move in that direction, I think that really signals to me that there should be more regulation, right? They shouldn't be, well, the brokers, this broker is only selling 275 paper. Well, a lot of banks only sell 275 paper, right? Like, I just feel like that's not,
So
it is what it is.
This is where I see this going. This is
Yeah.
kind of the missing piece to legislation they brought before Congress back in like 2009, 2010. All right. So back then, they were stating that because banks were paying a referral fee, they were jacking up interest rates to make more money in the secondary market to be able to afford that referral fee. And then they were looking at self-source deals with interest rates that were lower. Now, those were real stats back then. They didn't have enough firepower to make it happen. I think they have the firepower today because there's significantly more nationwide lenders. There's significantly more local lenders. And if they take a look, I mean, we're all BDOs, all right? We get paid less if we pay a referral fee. So who's going to pay a referral fee and charge a full boat pricing? And if they get a loan that's not a referral fee, you know what? I'm used to making a certain amount of money. I'm going to cut them a break on the interest rate so I can win the deal because I don't have a referral fee to pay.
But those are great points. But let me just go back to you real quick with two things. One, do you think that the services the broker is offering warrants a higher price to the borrower?
Some of my guys do. I mean, I do a lot of self-storage stuff, right? I don't pay a broker on the vast majority of my production. The brokers that I work with give me complete packages, like full, like real, like they make my life easier. You know what I mean? Like for those folks, you know what I mean? I think that they certainly are warranting it. And also, as far as taking a little haircut on comp for paying a broker, it's still, I'm still able to make it up with volume, right? $5 3 times is more than $10 once, right? So I don't mind that piece, but I think there's a lot of brokers too that I no longer work with. And in the beginning of my career, I had to work with them, and they were like, "Here's a name and a number. I'll wait around and get paid." And there's plenty of those guys out there in the space too. Shout out Gmail.
There's a lot of those guys.
Yeah.
And I'll answer your question by kind of, and I hate to do this because I'm known for it. I'm gonna take the long way. So, or is it worth it? Yes, but the reason why we pay a referral fee is because of the work that a broker does, right? And we pay a referral fee because it's the bank paying the fee to the agent for the work that agent is doing. And it's something that's not supposed to be passed on to the consumer. So what we are doing by increasing the interest rate to the consumer so we can pay that referral fee to the agent is we are charging the customer for paying for that service to the agent, because the agent is getting
That's a
paid
good
for all
point.
they're doing,
Yeah.
packaging, putting stuff together, is that referral fee. And if we get a loan request or we get a deal that's not from an agent, the majority of banks out there, I guarantee Congress is going to find, the investigation is going to find this, that self-funded deals are charged a lot less. The interest rates, I guarantee, are going to be about a 0.5 point less.
Are there, and maybe there's not enough of these types of brokers to make a difference, but I'm seeing more and more, and they're essentially helping the borrower shop the deal. And so by creating a more competitive environment, wouldn't they be bringing down the pricing in that scenario?
You would
We've all
hope
lost
so,
deals
yes.
we've all lost deals to
then again,
8% fixed.
right. And then again, it depends on the bank, and it depends on the broker. Like I've said this before. There's a tale of two brokers up here in the Metro Detroit area. You've got Ray and you've got Randy. They're both loan brokers. Ray's phenomenal. Ray brings me a lot of his transactions. He tries to do whatever is best for the customer, and he always does.
He's awesome.
He beats
He's
me
a
up
real
on Ray.
professional.
He beats me up on everything, and he's a true professional. Then you've got Randy. Randy's going to do whatever Randy can do for himself. He's going to go out there and he's going to beat up every bank on referral fee. He's going to beat up every bank on how much are you going to pay me. He doesn't care about the interest rate. He doesn't care if the bank can even get the deal done. Who's going to pay him the most? And Randy shoots me a deal here and there, and I say, yeah, I looked at it. We can't do it. No, I didn't look at it. I just refuse to do business with a guy like that. Right? So I think this investigation is going to exploit those guys as well. They're going to expose them.
Shout out Randy.
But to Alan's point though, Alan, so you were saying before, it's like, okay, well, the bank's making the decisions. The broker's a marketing engine.
That's all.
Why are we holding brokers accountable for defaults?
The idea for me is that I always thought of brokers ultimately as outsourced marketing, right? And then the assumption that they do is some packaging. They're giving me 3 years of tax returns, a PFS, a resume. Hey, can you do the deal? Now, that's enough for me, but some folks, like I work with one, like before, he's unbelievable. And he's a former SBA underwriter. That is a great referral partner. You know what I mean? Because it's he gives me a full memo. It's unbelievable. But even the bad ones and the good ones, whatever, we're the ones pulling the transcripts. We're the ones underwriting the deal. I'm the one that insists that they do a third-party financial due diligence on a business acquisition. Like, I don't know that needs to be the broker's responsibility. Now, if the example I used where the guy was junk feeing, we found out in the back office because they're saying that the problem they're experiencing when they're looking for a modification for temporary relief was based on their lack of working capital, that the deal was undercapitalized. So they asked me about it, and I said, guys, I gave them, $80,000, right? And that was actually a bit of an overfund based on what we saw and what the need was, even by a third-party report. So it didn't make sense. When we drilled down a little deeper, the borrower says, and I quote, well, after the broker grabbed his fee post-close, we only had $20,000 left. So this guy made a point from me and then charged, the example is like literally it was like $60,000 that we had no idea about. They kept the agreement away from us. They didn't like it. Obviously,
well, that's fraud, right? I mean,
it's fraud.
That's fraud.
And you know what? When
we all agree, by the way, we all agree that we got to get rid of the fraud. I mean, that's all unacceptable.
Yeah,
obviously.
And
I only think
it's disgusting.
I only think agents feet should be held to the fire if fraud if they knew about it or if they it came across their desk. And the vast majority of them, they're not going to know. I mean, a lot of them do enough due diligence, and the most, like I say, I can count on one hand the amount of loan brokers I do business with, but the vast majority are business brokers that I do business with. Yeah. And the vast majority of them vetted out the deal. And I deal a lot with on the sell side. So the vast majority of them have put these packages together. They vetted them out. They've put together really good credit information memorandums. They've dug into the numbers. Yeah. They understand the business. They understand everything about it. They know what's going on. And on those, very few fraud. It's very hard to do because you've already got a really good seasoned business broker who's gone through the deal, has vetted a lot of that stuff out. I think we're going to find more fraud on actual financial information from the seller side, if it's an acquisition. that they're going
Why
to
do you
be
think that?
cooking the books, putting together. And so let's say this, for instance, right? My big thing is come May, if you are selling a business, if you're serious about selling a business and it's May, you need to have your financial house in order. You better have completed and filed the prior year's tax return. Otherwise, number one, I don't think you're very sophisticated. Number two, you're hiding something. All right. Because those year-end financial statements that are management prepared, you could have put anything into QuickBooks at the time. And truth is, they could have put anything in QuickBooks, gave it to their accountant. Their accountant could have filed wrong tax returns. That's another story. Now, not only are you lying to a financial institution, you're lying to Uncle Sam, and now you're in a whole world of trouble. That's a big hole to dig. But I as soon as I get a file here in June, let alone maybe July in another couple of weeks, if they haven't filed their returns, I've already got a red flag raised that they're hiding something. I want to see those returns. I want to see what's going on, especially from a lot of, especially now in 24,
right?
Right. Yeah. And I'll tell them to file, especially now in 24 that we've gotten out of COVID. So any type of COVID related gains, losses, or anything that's going on, you're going to see a lot of growth like this. Anybody that got hurt in COVID, 22, 23, 24, you're going to see a trajectory like this. And a lot of transactions, you're seeing okay cash flow in 23 and really good cash flow in 24. And if you're trying to get me to rely on management prepared financial statements for 24, you're barking up the wrong tree because I'm not going to go there. I need tax returns.
That dog won't hunt.
That dog will not hunt.
I thought you guys were talking about the when you said COVID, I was kind of laughing at myself a little bit. I had a deal recently, and it was a lousy deal, right? So I was, but I had a borrower who has been searching for a while. There's deal fatigue. They're trying to find the right business. They've got money and experience. That's not the problem. The problem is they couldn't find the right deal, and they're starting to get burnt out, right? So he's like, "Hey, no, this is fine." And I go, "2023 was terrible. Like, what happened?" And he goes, "Well, like COVID." I'm like, "No, dude, that one doesn't work anymore." You know what I mean? We're in the post-COVID world here, and I don't want to hear that this business, which was not dependent upon supply chain, it was a crappy e-commerce deal, and they're like, "Well, COVID-19." I'm like, "Bro, that's so last year. We're not playing."
Way to pull out the COVID-19 full government name for that one.
Right. 2024 financial performance. If it's still impacted by COVID, please go find another business. But the fraud, the business broker thing, here's a question. All right, so a business closes, right? Somebody buys a business, and the business broker lists the business. He helps us with the transaction. He brings us as a lender into the deal. He brings us the buyer, the seller. We vet it. It looks good. We do all this stuff. Nothing goofy on the transcripts. But then the seller totally violates the non-compete or does something really sketchy, or he didn't disclose that, the receptionist and the main tech are actually his kids, whatever. When sellers screw up after the fact, a business broker, no one would even have that conversation, nor should you. Why is that a double standard now with a loan broker, in that just because they're just placing the debt, if they're consciously committing fraud, like that crazy scheme that Kroge described, those folks should go to prison, legitimately.
Right.
You know what I mean? But if a loan broker is doing the best he can do, what else should we have them do up front, right? I've got loan brokers that pull credit before I see the file. Of course, we pull it again as the bank verifies it, but what else could or should they be doing? And I wonder what negative repercussions are there? Does the bill identify any penalty, Ray, or is it more or less?
No, it's nothing like that.
Okay.
This is step one, but
it's just the investigation, right, Ray?
Yeah, it's just getting the information that Congress wants, and SBA, I think, has really just not given it to them, so they want to force them to do it through this legislation.
Mm-hmm.
But I think the question really moves to what's the final step, and it's either and it's get banned from the program, essentially. So are we going to see brokers that have higher defaults get banned from the program because the government's losing money? I think it's possible.
That's a good parlay, though. Actually launching next month. It's the loan broker certification course. And for 5 easy payments of $19.99, I'm going to show you exactly how to act ethically, and then I'll provide you. Bargain. Right? I'll provide you with a PDF with my signature on the bottom that says, "This guy's all right." And then you can just hang on to that. So, push comes to shove with the gov.
I would not advise that, Alan. I would not advise that.
The price point's attractive, though.
Do you want to hear where I think ultimately
Yeah.
this whole investigation is going to go, and where I think Congress is trying to lead this to?
Yeah.
I think Congress is trying to lead this to eliminating agents being paid a referral fee. I think they're trying to eliminate the ability for a bank to buy business, number one, and number two, a bank an agent the ability to the need to commit fraud by separating that payment. Right? If you're not paying an agent, there's a separation there for them to actually send it to the bank that does the most good for the borrower. Right? The bank that's going to be able to do the deal better. Now, they tried to, like I said, they tried to do this back in 2009, 2010. They tried to eliminate, they didn't even they cut right to the chase, and they said, banks should not be paying for business. Banks should not be paying referral fees. And they tried to get
big
that
banks are
passed. We
influencing
lobbied
policy.
against it, and we won. What's
Yeah.
that?
It's a big credit to the big banks. I mean,
Yeah.
the fact is that policy directly supports big banking, who ultimately
Absolutely.
contributes money to lobbyists, and it goes on and on and on. I mean,
Right.
if you're a small bank getting into SBA and you're using it as a revenue driver to do good in your community, and you're doing, you try, and you need to get out there, and you're not known by some of these other institutions, you know what I mean? As we always say, it's like, that's kind of, in my view, that's not cool. I think that is honestly not what should be happening. And I think that,
I
the
agree.
idea of the referral fee, why don't we listen? Why don't we just have some sort of, I don't know. I was going to say there should be some kind of, I don't want to say a full blown license.
Well, what about a clawback? Because when I posted about this on LinkedIn, multiple brokers said that their referral agreements with the banks include clawback provisions.
Get out of here! Really? Wow.
Mm-hmm. And I'm curious what you guys think, because I've never seen that.
I've never seen that either.
However,
An alternative is super common.
If you get an early default in month 4 and you just paid the broker 2 points, that hurts. Because you didn't make any money. 2
points.
That's your first mistake. That's your first way. That's the first way to ride a base. But that does hurt, Ray. It hurts worse month 17. Yeah. So I don't know.
It does.
What do you guys think about it making an actual a barrier to entry? Right? Like when I was brokering, I gave them a W-9, and and I'm off to the races. That was it. And what if they did some sort of background check? Run a clear report or whatever. LexisNexis, whatever you want to use.
For a while, they used
did,
to
right?
have to do that. When I worked for Bank United, they ran all of our agents through the ringer. They did a background check. They did a credit check. They did Cavers.
Okay.
They did clear. They did all that stuff.
Yeah.
And every once in a while, I would get email saying, "Hey, your agent has a $30,000 tax lien. He needs to clear that up if he wants to get a referral." So
we did that with LexisNexis at our last lender, and I saw some wild things on the background checks.
I think it should be standard. I mean, it should be mandated that those steps are taken. I think that's at least something. But then again,
and I think our bank Googles the name, isn't that right, Al? Don't we Google the name?
We also search, and we find out that it's the maiden name of a BDO at a bank. So there's that, right? And then there's we check LinkedIn as well, because if it's like, if it's somebody that has no business at all in B2B in any capacity, then that's obviously just someone who's signing a 159 and funneling the money elsewhere, and that's
right.
That stuff's really sketchy, but it happens a lot more than people want to talk about. You know what I mean? It's the truth. Like, there's plenty of spouses of BDOs that are signing 159s at other institutions, not at ours, but certainly that's very common. And in fact, people on LinkedIn, other bankers, they're butthurt that I can't pay them. I'm like, it's just not our policy. You know what I mean? Because there's issues where people were funneling deals without letting their bank decline it first. That's a clear conflict. You know what I mean? So that's it is what it is.
But that's a different that's their bank's problem. I mean, they've hired someone who wants to be dishonest.
That's
why is that my
right.
problem?
Yeah, you're right about that. I mean, what would you say is a reasonable barrier to entry that should be standard? All right, the LexisNexis is the background. I think we've
already put a lot of those up. I think the background checks. I think, and just know your customer too. So if you're doing business with a fraudulent and a shady agent, you're probably a shady BDO. Let's be real, because
There's
most
no way you don't
BDOs that want to
know.
protect their
Right.
portfolio, that want to protect their bank, they're not
Right.
doing. I just said Ray and Randy, right? I'm never doing business with Randy because he's a shady broker, and I just don't want to do business with guys like that. All right, because I want to protect my portfolio, I want to protect my bank, I want to protect my name, more importantly.
Yeah.
So it's like there are others out there that will do that. So if you're doing business with a shady broker, you're probably a shady BDO.
That's a really good point. I mean, the broker that I identified before that did the junk fees and all that nonsense, it's challenging to me because he's still out there working with other people I know. And I give them the heads up because that's what we need to do in our community. You know what I mean? But some folks are just desperate for paper and they don't really care. That's challenging me. And that's to your point, right? It's like that's a character flaw. You guys are both saying this. That's the bank hired a dirtbag if they're gonna play in that space. You know, it's just what do you do then? But again, barrier to entry, I think, is limited. Okay. Like, okay, we used to run LexisNexis. I don't know what we currently do, whatever. There's plenty of banks that don't. Okay. That's the reality. And they want the business, they want the revenue, they want the shareholder value, right? I get it. But there should be more. There should be like some kind of test. There should be like something to make the motion annoying enough where the armchair people or get rich quick people go away. That's what I think.
Question 1, is fraud acceptable? Yes or no?
Oh, absolutely not.
No.
It's
don't do.
Yes, you're right.
Brokers don't do fraud. Banks vet the brokers. SBA hold the lenders accountable to make sure they're vetting their brokers.
Right.
And Congress, just anytime they're making a list, I get nervous. But
I'm with you, Ray. Anytime they make a list, I
they're
get
checking
nervous
it twice.
But like I've said before, they tried 2 things back in 2009, 2010. Number 1, they tried to eliminate referral fees that we were allowed to pay to agents. Number 2, they immediately wanted to eliminate the secondary market. And even the SBA was like, whoa. We can't do that, or we're going to lose a whole lot of lenders across the country. So then what they tried to do is say, okay, instead of being able to make all the money up to 10 points and then anything above 10 points, you split with the SBA, let's drop it down to 8. And then that got eradicated as well. So, Congress, anytime that there's a big shakeup in SBA, and again, back in the Great Recession, it was a huge shakeup because the economy went to hell. And guess what? Lo and behold, SBA defaults went through the roof. Go figure, right? So they tried to throw as much as they could and try to regulate the SBA. They didn't go anywhere. Matter of fact, we got loan limits increased from 2 million to 5 million. So I'd say we won, right? So they're coming after the SBA again. They're coming after agents again. This is, turning its ugly head. They're going to try to do something crazy. They're not going to get it. It's going to go fall on deaf ears. We're going to still be able to go the way we want to and do business the way that we have been doing. The good news is maybe we get an increase from 5 million to 10 million. I think that'd be great.
And by the way, if you are savvy enough of a broker to get fraud through the SBA process,
right,
drop down a comment below because that's impressive.
Because Okram is watching.
Come on the podcast. Let's talk about it.
Everybody's watching.
What happens when you report someone to Okram? Do you guys know? What happens?
It goes into a pile, I think.
It just sits on a desk, right? I mean, they're not like coming up with vans. You know what I mean?
They're busy. They're busy.
It used to be the OIG. The OIG used to be ahead of everything.
They're all gone.
Now they're all gone. Exactly. It's like, I don't know. Maybe they're going to try to bring more oversight on that. Who knows, Al? Honestly.
Yeah, it's crazy.
I've said this once. I've said it before. When all the people in Hollywood got up in arms over the Epstein flight logs, I'm like, if you've never been there, what do you got to worry about? Right? It's just like now, if you never commit fraud, if you're not working with shady brokers, what do you got to worry about? Let it go through.
That's it.
You
don't even need a memory. You know what I mean? Because I always tell the truth.
That's right. Good job, GW.
I second that.
No, that's a good topic. It's interesting. I certainly know some referral partner friends of mine that are like, hey, what's that about? And like, to be honest with you, I just
because those are the good guys.
Yeah, I tell them tune in and we'll
they might
we'll do it for you.
They might cap the fee. Maybe they cap the fee. I mean, that'd be a big shakeup.
That would be a big shakeup if they cap the fee.
I'm glad that you guys talked about this today. I love episodes where I don't have to I love that I'm here. Like I was almost just for fun. But I love that I don't have to initiate conversation or have questions ready because you guys were just
organic.
Yeah, that's what these episodes...
Orgasmic.
Oh, Ray.
What did we say about Randy earlier?
F Randy.
Randy, shout out.
We need to put that on a
Shout
t-shirt.
outs, Randy. And how about the guy with the wholesale assignable purchase agreement hustle? That's
Bro,
really
Next
wild.
level. They're
man.
going to end up in jail. They're going to end
They
up
are
in
gonna
jail.
end up
Jail.
They better
Straight
go to
to jail.
I didn't catch
Listen,
it on
if
the
we-
first deal I saw with these guys, but I caught it on the second one because they sent me the wrong LOI. They sent me the LOI with the assignment agreement.
It
Like,
was
dude, what the
sloppy.
like, what the fuck is this? Like, what is this?
Yeah.
What are you guys doing? Like, I can't do
Yeah.
this. I can't do this.
And by the
with
way,
you.
and as a BDO, like that's where, like, don't just ignore that and be
Yeah.
like, yeah, just
No.
send me the right one and then move about your business.
I was
Be
just
like,
gonna
man,
say that,
I
right?
mean,
Like,
If you're
hold the phone.
if you're a BDO that's got your volume is bad, you're worried about losing your job, whatever, still don't do fraud. All right, don't do it. Not only 'cause it's wrong, but we all love this, right? No bank has a better business partner than the Small Business Administration. I don't care how many referrals any broker sends. There's not a better business partner to the institution than this Small Business Administration. So we need to protect that at all costs. We love this world. We love the people we get to help, the sense of community we have, right? Even on this call, we're all in 4 different parts of the country, and we're all really good friends in real life. We got to protect this. And if that means you don't hit your goal of 8 million, right? Then so be it. Pick up the phone. Don't pick
this
up the
month?
fraud. This month, I
Pick
think
up
I'm at 15 this month. I think I have to check and
I
see.
have fraud phobia.
I got
Fraud phobia.
fraud phobia.
I got fraud phobia now. Dude, I saw those transcripts. 3 years of tax returns filed 2 days apart from each other, coincidentally 1 week before the loan application. Sorry,
Wow.
we can't move forward with this request.
Oops.
Adverse
Sketchy is
action.
an understatement.
That's
Right.
crazy, man.
So, yeah, dude, I'll tell you about it offline. It's weird, but anyway, yeah. So just do the right thing,
Guys,
and that's it.
That and side agreements. I see a lot of side agreements. Matter of fact, I caught a
Side
side agreement.
Yeah.
Dude, I did an acquisition of an assisted living facility, and when it first came to me, it was for like $650,000. And I'm like, there's no way this thing doesn't. It was a smaller deal. There's no way this thing's not going to cash flow. It's it doesn't work. Buy. Comes back 600,000. No, buy 500. No. The only way I can get this to work is it's only going to value in at about $450,000. That's it. And then we got good cash flow to pay for your salary. It's about 1.25 debt service coverage. Then it works. So we're like, okay, fine. They write a purchase agreement. Everybody signs a purchase agreement. It says $450. Everything's going fine, right? Everything's good. He calls me back in March. It says, man, these payments are killing me. I'm like, well, give me the financials. Let me take a look. Let me see everything. Like, man, you guys are making, $150,000 extra a year on this. You guys should be doing great. He goes, yeah, but we got to pay the seller $900,000 a month and this. And I'm like, what are you talking about? You don't have to pay the seller anything. He's out. It's like, well, and this is, unfortunately a Detroit deal where I was out of town and I couldn't be at the closing. So they slid in a side deal to go back up to the $650,000 original purchase price. And so I told him, like, you need to hire an attorney. You need to hire it now. Here's a purchase agreement. Here's an agreement saying you're not getting other debt. Here's everything else. You committed fraud along with this other guy. It's like, well, they told me I had to, and they said it was on the up and up. Found out who the broker. Well, I went to the broker, found out that he knew about it, fired his ass immediately. And this is a broker I've done business with quite a bit, so I'm scared to find out if he's done this on other deals that I have no idea about. But I found this out, fired him immediately. He immediately stopped making payments to the seller, hired an attorney to sue the attorney who was putting the deal together and the seller for committing fraud. So he's making payments to us, fortunately, but he's not making payments to the seller, which he shouldn't have had to in the beginning. So I'm seeing that too.
I'm leaving this podcast more scared than ever.
It's wild the stuff that goes on out there. Yeah.
It's like dodging. You got to dodge raindrops out here.
And honestly, that's why I like being local, because I get to go to the closing and get to hear all the that's been going on the whole entire time that I don't get to see because I'm behind a desk. I get to go to the closing and get to hear all the stories, figure out what's going on, get some red flags raised. I actually grabbed, this is like 5-6 years ago. I grabbed the closing package, yanked it back, and said, you aren't signing a damn piece of this paperwork until you go and you inspect your property. Because after they signed the purchase agreement, the seller says, you can't come into the business until we close. Ooh. And I said, the hell, and I found that out at closing. because we're talking and I'm like, how's everything going? Have you met the staff? Have you done this? Have you done that? He's like,
Transition.
yeah. And we weren't allowed to come and look at the property or anything until closing. And I grabbed the paperwork.
And did you really say that?
I
like
did.
That?
So, because this was a deal that took 6 months to close. There was a lot of issues on both sides. It took 6 months to close. I said, you haven't seen or talked to or anything with this business in 6 months? He goes, no. I'm like, you're not signing this paperwork until you go out there and you visit that site. You go and look at everything, make sure the inventory's there, make sure this is there, make sure everything else. Because he relied on everybody else. I'm like, dude, what are you doing? What are you doing? I have people, when they buy a business, they work their 30 days going up to the closing to make sure the numbers are right. Like, get your ass out of here and go work the business. And I did. I said, we'll close this tomorrow, but I need to know from you that store meets your expectations of what you thought, since you haven't been there in 6 months.
Yeah. Buyers need to be I see some buyers, they need to be a whole lot more skeptical.
A whole lot more skeptical.
I think you should do do some content on that, Alan. I think you would have fun.
Yeah. And as good as we are as BDOs at vetting out deals and underwriting them and looking at them, we have the best interest of the bank in mind, guys. Yeah. All right. So if you as a buyer are relying on us to tell you if it's a good deal for you, don't do that. Don't do that.
Don't.
Rely on yourself. Don't do it. Do your own due diligence. Do your own underwriting. Get your own Q of E. Hire your own Q of E specialist. Don't rely on us, because we're looking out for us. We're looking out for the bank. Yeah, we love you. We want to do business with you. You're our buddies. But we're looking out for the bank. All right?
Mm-hmm.
F. Randy.
Period.
With a T at the end.
Guys, we could talk about this for another hour, I feel like.
On God.
Oh, God. So if you want to do a part 2, just let me know. We'll queue it back up and we can keep talking about it. But thanks for the episode. Thanks for the insight. If anybody wants to weigh in on this subject or can hear more about it, send us an email to the BDO Show.
I want to hear from our broker friends too. I want to hear from broker people, referral partners. What do you think? Are we way off base? Do we touch a nerve? Do you think? How do you feel about it? And be
we're
open.
Off base, but tonight we're not.
Leave your fraud stories in the comments down below.
Straight up.
Tag the FBI.
Tag
the OIG.
Yeah.
They'll file it under T for trash.
Yeah.
Well, like I was saying, you guys, we will see you next time.
Read the bill.
Read the SOP.